I am Ross Burland. I'm an analyst and editor for FXStreet, and I am looking at the RBA meeting to be a major event for Asian markets at the beginning of this week on Tuesday. And for any of those who wish to hang around after the US close on Monday to trade the event, as it could be quite a mover for the Australian dollar. Being so, in respect that the RBA are in a predicament. The predicament is that inflation in the Australian economy is, I think, at around about a 13-year low. Now, while inflation isn't necessarily a great thing for consumers, I mean, who wants to pay higher prices for goods after all? The RBA use inflation, and they set a target as a number of aspects to the economy that they try to control. And their target is well above where inflation lies currently. The bracket that the RBA target is between 2 and 3%, and inflation is currently headline just above 1.5%. Now, I don't think the RBA, however, are going to act to try and lift inflation by cutting interest rates this time around. I think they may wait until September to do anything if need be. The reason why I feel that is because, well, going back and looking at the minutes of the previous meeting, there have not been any shock events in respect of key indicators within the Australian economy, nor have there been necessarily in the global picture. Brexit obviously was something of concern, but there seems to have been less risk aversion around that scenario, and markets have calmed down and sort of moved on from that at the moment. So, obviously the RBA are looking more at their own economy. Yes, there has been an uptick in unemployment in the economy, but not by much. I think it was 5.8. Well, it was 5.8 over 5.7 previous or expected. So, there have not been a cause. There has not been a cause for the RBA to be too concerned, and house prices currently are relatively stable. So those are the factors that the RBA would consider, especially that we've seen an improvement, albeit not by much, in the inflation based on the June quarter over March's. I think the RBA will be on hold. That should give lift to the Australian dollar, especially due to the terrible data that we saw out of the US economy in terms of their GDP numbers that were revealed to us. Now, I'd also been advocating that the RBA will be on hold because they'd be expecting a stronger US dollar in H2. Now, I thought that there would be a stronger US dollar in H2, but that does not mean that I'm still not a bear on the US economy, nor do I think the Federal Reserve would be necessarily raising rates because of the improvements that we've seen in US data of late. But the RBA would have been looking at that data over the course of these weeks leading into tomorrow's meeting, seeing that the US dollar could be something that they could factor in to this meeting, which is happening tomorrow, in respect to the Australian dollar. Now, obviously a stronger US dollar is good for the Australian economy in terms of exports, and it's resulting in a weaker Australian dollar. But given these GDP numbers that came out of the US on Friday, the RBA, may be looking twice at the Australian economy now and their forecast for the Australian dollar. So if they were to cut interest rates tomorrow, then only perhaps by 25 basis points down to 1.5%. If they were to leave rates on hold, then, like I said, I think we'll have a rally in the Aussie, and we've got non-farm payrolls coming out at the end of the week. Non-farm payrolls have been improving. This is in terms of the US economy, the jobs market. It has been improving in terms of the headline, which is what markets trade upon. which would be supportive of the US dollar if we see a continuation of those kind of improvements. However, when you look behind that data, you need to start analysing what the headline is made up of. Is it more part-time jobs and lower paid jobs, or are they skilled longer-term jobs and higher wages in respect of those skilled jobs that are coming onto the market? I beg to differ. Well, in fact, the numbers tell you that they're not. So, in terms of the currency, the way to play this, obviously, with an RBA that is on hold, it's good for the Australian dollar. You'll see some dollar strength, Australian dollar strength. You could be looking at May highs at 77. If the non-farm payroll result is positive, then you're going to see a stronger greenback on the back of it. If they're weak, coupled with the GDP, you could see the Australian dollar taking off on an RBA that's on hold.